Good evening, ladies and gentlemen. Thanks for coming. My name is Bill Morgan. I'm the CFO of Anglo Asian Mining. Keith has just actually been through all of the best bits, so I can keep this presentation very short. This is a group overview of the company. We're very established, as Keith said. We were listed on AIM in 2005. We produced gold in 2009. We've got a very experienced board and very strong management, and we've got an excellent relationship with the government in Azerbaijan, which is a very stable jurisdiction. I like to joke about the fact that the company politically is more stable than the one we're sitting in at the moment, but I don't think that would be a very good idea, as you all have to live here. Our main site is Gedabay in western Azerbaijan. This is in the foothills of the Caucasus Mountains, and there we've got our 3 mines and our processing facilities, and we've got very highly developed infrastructure. We've got very good road access. We've got a substation at site which we built where we get power from the grid, and as well as being a producing company, we've got a very good pipeline of exploration projects and potential for future mines. To give you an idea of the production and the financials of the company, we've got growing production. Last year, and this is calendar years, we did just over 83,000 gold equivalent ounces. That's gold, silver and copper. We're guiding this year for 82 to 86,000 gold equivalent ounces of production. Our financial years are calendar. We've not released the results yet for the full year of 2018. The last financial results we released for the 6 months to June of last year, where we posted revenues of 40 million and profit before tax of just over 8 million. And we currently have net cash. We're a very low cost producer. If you look at the gold industry, the last AISC, all-in sustaining cost, that we actually released on the market was the 6 months to June of last year, where we had a cost of $543 per ounce, which is very low. This is partly because we're very well served with infrastructure and we're an efficient company, but partly because Azerbaijan is a very cheap country to actually operate and do business in. As I said, or Keith said, we just paid our first dividend last year because of the good cash flow that we had. And we've got a dividend policy of targeting 25% of free cash flow each year by way of 2 dividends each year, an interim and a final, which are roughly equal. And we paid our first maiden dividend of 3 US cents. We declare in dollars, but we actually pay in sterling using an exchange rate close to when we pay the dividend. This is to give you some idea of the shareholders of the company. If I can get the button working. Risa Vaziri and Governor John Sununu, they hold just under 40% of the company, and they were actually the founders of the company. Between them, the rest of the directors and the senior management, we own just over 41% of the company. So, you know, we're very much invested in what we're doing. Last year, the company had a very, very good share price run. We basically doubled the share price from around 40 to around 80, and that was on the back of the very good results that we announced, plus the dividend that we announced. Can you still hear me without the mic? Yeah, sorry, I'm getting confused here with microphones. And we will be releasing our full year 2018 financial results in the middle of May. And we're going to have an annual general meeting on the 20th of June. Okay, as I said, we've got a very strong team. Risa Vaziri, he set the company up. He's a very prominent Azeri, he's a very prominent businessman in Azerbaijan. He's originally of Iranian extraction, but he's now a US citizen. He's been doing business in Azerbaijan for a very long time. He's a personal friend of the president, and we're very well connected and part of the political establishment. He set the business up along with Governor John Sununu. He was the chief of staff to the first President George Bush. Khosrow, he's our non-executive chairman. He's in his 70s. He spent a long career with the IFC and World Bank, and he now acts as a non-exec chairman for various companies in that part of the world, where he did a lot of work for those institutions. We've got Richard and John, they're both English. They're non-execs from the finance and the technical disciplines. John is actually sitting here in the audience. And in terms of the management, we've got myself, who's the CFO, Farhang, who's our technical director, and Stephen, who's our geologist, and he's Welsh. Okay, this is a little bit about Azerbaijan. It's, as you can say, it's a small country on the Caspian Sea. We run the company from the capital in Baku, and as I say, our three sites are Gedabay, which is the main operating site of the company in the Caucasus Mountains. We've got another site, or another concession at Gosha, which we've got a small underground mine. And we've got Ordubad in the Nakhchivan enclave of Azerbaijan, which is an early stage project where we're doing some geological work. This is an overview of the Gedabek site. This is about 1 mile from the village of Gedabek, which is by a main road. And there we have the main open pit mine there. We have a mine camp and we have offices. We have our processing facilities there. We've got a second open pit mine, which we call Ugol, which is 4.5 kilometres from the processing facilities. And this is along a road that we built to actually get access to it. And we also have an underground mine there called Gadir, which is the portal, which is situated 600 metres from the processing facilities. And as I say, this is well served by road. We've got power from the grid. We've got a local labour supply, so it's very easy to operate there. This is a quick summary of our three mines. This is the main open pit mine. This is the back wall of the mine, and in the background there you can see the village of Gedabay, so that gives you an idea of how the mine is situated according to or in conjunction with the local population. This has been producing since 2009. We did 362,000 tonnes at just over 1.6 grams, and it's got a mineral resource of just over 1 million ounces of gold and 95,000 tonnes of copper. Okay, this is our second open pit mine, which was Ugol. The notable thing about Ugol was that we discovered this in October 2016, and we got it into production in September 2017, which is just over a year. And for those of you who know the mining business, this is phenomenal. It normally takes about 10 years to develop a mine. A lot of that is due to all of the permitting and the environmental impact assessments and the whole range of things that you need to do. We don't have to do any of that because within our 300 square kilometre Gedabek concession, we're actually free to do what we want. So if we find a deposit, we can just go ahead and develop it, and away we go. And as a result, we got this into production within a year. It's got ore reserves of about 200,000 ounces of gold and just over 1 million ounces of silver. And there's no copper here, whereas with the open pit mine is grading about 0.5% copper. This is actually just gold and silver. This is the Gadir underground mine. This was a fairly entrepreneurial piece of mining that we did. We discovered a resource on some fairly limited geological data, and then rather than actually do a long study and a feasibility study and a lot of geological exploration work, we actually just sunk a decline into the ore body and started mining. And it's worked very well. So it's been in production since 2015. Last year we did 125,000 tonnes, and it's grading 4.5 grams per tonne. And this is good ore, and we've just published an ore reserve and a mineral resource last week of 172,000 ounces of gold and 3,800 tonnes of copper. This slide is my favourite slide. It's not so fearsome as it looks. And this gives you the background to the company's processing, and it's basically designed to be read from the top clockwise. So when the company started, it started by doing fairly simple heap leaching of crushed ore, which is you just take the ore, you crush it, you put it into a pad, you pour cyanide over it, and that trickles through, and you extract the gold from the dissolved cyanide. The next stage in the company's development was a SART plant. This was just a plant to get the copper out of the residue from the heap leaching process. The next stage was to build an agitation leaching plant. This is basically where you get big tanks of cyanide and ore, and you have shorter residence times, and then you take the gold out of there without getting too technical. It's very similar to a carbon-in-leach plant, which people who know the gold mining industry are familiar with. The only difference between what we do here is we use resin for the deabsorption rather than carbon. The next stage we do some heap leaching of uncrushed ore. This is for low-grade ore where we just take the rocks, we just pile it all together without crushing it, and again we irrigate it with cyanide and take the gold out that way. And the final processing plant that we built was a flotation plant. This is a very different technology, and we use it to extract the copper from the ore. We were running the flotation plants and the agitation leaching plants together. We would put it through the flotation plant first and then through the agitation leaching plant. And the reason for that was we were limited by the amount of crushing and grinding capacity that we had. But last year we actually commissioned a second crusher and grinding circuit, line. And we're now actually operating both the flotation plant and the agitation leaching plant as two separate processing plants in parallel. Okay, this is just a view of some of the things we've done. As I've said, we put in a second crusher line for the flotation plant last year, and this is a picture of the jaw crusher, and this is a picture of the SAG mill that we use for the grinding. This was a thickener that we put in for the flotation plant, and again, you can see an idea of the topography, and this is some of the mining equipment that we've been buying. The company 5 years ago was fairly heavily in debt. It had over $50 million worth of debt and was fairly struggling to survive, but we've turned it around fantastically over the last 5 years, and because of that we're now able to spend money on things like renewing the mining fleet and bringing the project up to scratch.
Bill, you've got about 3 minutes.
3 minutes, okay. On the exploration program, we're doing a big exploration program. I won't go into detail, it's here if I've only got 3 minutes. The main thing that we did last year was a helicopter survey of the entire Gedda Bay site, and in simplistic terms we basically flew a big metal detector over the whole ground. So big you need a helicopter rather than a pole, and we're waiting for the results for that to come, and we will be announcing the results of that survey at the end of March. We have another early stage project in Azerbaijan, which is the enclave, and at the moment we've got some geologists doing some work really interpreting Soviet data and trying to get their mind around exactly what we've got there. It could be 3 or 4 years before we do anything there, but obviously this would fit in nicely with what we're doing at the other mine site, and there's potentially big projects there. Okay, quick financial highlights. I think we've been through this. We've been through the revenue. We had very strong cash flow last year. We turned around net debt of 18.1 million into net cash of 6.1 million. We paid our maiden dividend. We're guiding for both the full year 2018 and this year 2019 of paying a minimum of 6 US cents per share. And the contract with the government is fairly complicated, but at the moment we have an effective royalty of 12.75%. As you can see, our production has been growing nicely. It grew 17% year on year last year, from 71 to 83,000 gold equivalent ounces, and this year we're guiding 82 to 86,000 gold equivalent ounces. It's not so strong an increase as last year, but we are demonstrating that we've got sustainable production from the mine. And really this is the last slide of why invest in Anglo Asian. You know, we're established, we're experienced, we've got a first mover advantage in Azerbaijan, we're cash generative, we pay dividends, we're increasing the investor profile of the company, we've got the fast track ability, and we've still got a lot of exploration potential to take the company forward, both organically at Gedda Bay. Obviously we've got the Azerbaijan project that is a bit more down the track, but there's another area to grow the company. And we've started to think maybe that there's a bit more to the mining business in Azerbaijan, but that's difficult in terms of moving outside the country, but that's something we keep an eye on. So, Anglo Asian Mining.
Bill, thank you very much for that. Do we have any questions in the audience? There's one there.
Yes. Could you give us a rough idea of how much capex you've done to get into production?
In total, we've done getting on for 100 million, I think. The main part of the capex was the agitating leaching plant. That was 50 million. Then you've got all of the other mining equipment, the cost of developing the mines. The flotation plant actually was pretty cheap. But you're looking somewhere between, I think, about 80 to 100 million off the top of my head from what we're doing.
So a second question in the audience. There's one over here.
Bill, thank you for that. You've got a very commendably low all-in sustaining cost. Could you talk to your cash cost, please, and then also arbitrage that back with the previous question in terms of how you account that vis-a-vis capex, particularly with your need, I think, for further exploration to prove up your resources a little bit, given your current production?
I couldn't give you a cash cost figure off the top of my head. Obviously, it's going to be lower than the all-in sustaining cost. I would imagine, as I say, off the top of my head, it's around about $500, thinking about what our capital cost was, or the capital part of the all-in sustaining cost. Sorry, in terms of taking that into our capital?
Well, just arbitraging against the capital cost vis-a-vis Marcus's question, because you've clearly got quite a lot of exploration to go ahead, and you clearly need to prove up your resources a little bit, given your annual production, if you agree with that.
Yes, I mean, the fact is that because we've got these very low costs, and we're cash generative, we are able actually now to fully fund the geological exploration that we are doing. We announced that we spent 4.5 million last year on geological exploration. That was funded from internal resources. I would think the figure this year would be roughly the same, and again that would all be funded from cash that we're generating. So I think the low cost gives us enough cash generating ability to be able to fund everything that we want to do in terms of the geological work, the firming up of the resources. And obviously, if a project was to come along that we wanted to invest in, say we discover a new ore body out of the helicopter survey, we've either got our own funds to do that, or we've got very good access to bank finance. So, I mean, obviously, having such a low cost gives us the flexibility to do these things, given that we can generate the cash. I mean, a lot of gold miners who've got a all-in sustaining cost of $1,000 are, you know, really working hard, really just to stand still, where we don't have that. It gives us the flexibility to do what we want.
Thank you.
Okay, are there any other last questions in the audience? Knows the answer, so thank you very much, Bill. That was great.